There's a company that owns pieces of every major corporation on Earth: Apple, Microsoft, Amazon, Tesla, Google, Pfizer, Goldman Sachs. They hold voting power in over 400 of the 500 largest companies in America. They control $12.5 trillion in assets. That's more money than the entire economy of every country except the United States and China. And most people have never heard of them. BlackRock manages more wealth than the GDP of Japan, Germany, and the United Kingdom combined. They vote on corporate boards, influence executive decisions, and shape the direction of entire industries. When the Federal Reserve needed help managing the economy during the pandemic, they called BlackRock. When governments need financial advice, they turn to BlackRock. When pension funds and retirement accounts need management, BlackRock handles trillions of those dollars too. But here's what should make you pay attention at night. This isn't a bank. This isn't a government. This is a private company with more financial influence than most nations. And they operate largely outside public awareness, wielding power that most people don't understand, and regulators continuously debate how to oversee. This is the story of how one firm grew from managing $53 billion in 1994 to controlling over $10 trillion today, how they used financial crises to expand their empire, how they've positioned themselves at the center of global finance, and why their influence over the economy, over your investments, over the companies you work for and buy from, is deeper than you ever imagined. BlackRock didn't become the world's largest asset manager by accident. They engineered it through strategic acquisitions, technological innovation, and by positioning themselves as indispensable during major global financial events of the past 3 decades. And once you see how they built this empire, you'll understand why they're not just managing money, they're managing the entire system. Let me show you the numbers that reveal the scope of BlackRock's influence. $12.53 trillion in assets under management as of 2025. To put that in perspective, only 2 countries on Earth have a gross domestic product higher than BlackRock's assets under management. The United States at $28 trillion and China at $18 trillion. BlackRock controls more wealth than the entire economy of Japan, Germany, India, or the United Kingdom. But raw numbers don't tell the full story. The real power comes from how that money is deployed. BlackRock holds significant stakes in virtually every major corporation you can name. They're among the top 3 shareholders in 84% of S&P 500 companies. When you buy an iPhone, shop on Amazon, drive a Tesla, or use Google, you're generating profits for companies where BlackRock holds substantial voting power. This isn't passive ownership. BlackRock actively votes on corporate governance issues, board appointments, executive compensation, and strategic decisions. They have a team of approximately 70 analysts whose job is to engage with company management and vote shares on behalf of their clients. When BlackRock speaks, corporate boardrooms listen. The concentration of this voting power is unprecedented in modern finance. BlackRock, along with Vanguard and State Street, collectively known as the Big Three, control an estimated 22% of shares in the 500 largest publicly traded companies. That means roughly 1 in 5 votes at corporate shareholder meetings is controlled by these 3 firms, and BlackRock is the largest of the 3. But how did one company accumulate this much influence? The answer lies in a strategy that turned financial crises into opportunities for massive expansion. BlackRock's defining moment came during the 2008 financial crisis, when most financial institutions were struggling to survive. While banks were failing and credit markets were frozen, BlackRock saw opportunity. In 2009, as the financial world was still reeling from the crisis, BlackRock made a move that would transform them into a global powerhouse. They acquired Barclays Global Investors for $13.5 billion. This wasn't just any acquisition. Barclays Global Investors was the world's largest asset manager at the time, and the deal nearly doubled BlackRock's assets under management overnight. The timing was perfect. Barclays needed to sell due to financial pressures from the crisis. BlackRock had positioned itself to play offense, while everyone else was scrambling for survival. They used money from investors worldwide to finance the acquisition, essentially leveraging the crisis to devour their biggest competitor and establish market dominance. The Barclays acquisition brought something even more valuable than size. It included iShares, which would become the world's largest exchange-traded fund platform. Today, iShares manages over $2 trillion across more than 800 products. This gave BlackRock control over a massive portion of the ETF market, which has exploded in popularity over the past decade. Exchange-traded funds are crucial to understanding BlackRock's influence. Unlike traditional mutual funds, ETFs trade like stocks and often track market indices. When you invest in an S&P 500 ETF, you're not buying individual stocks. You're buying shares of a fund that owns pieces of all 500 companies in the index. BlackRock manages many of the largest ETFs in the world, which means they hold voting rights for millions of individual investors who may not even realize BlackRock is voting on their behalf. This structure creates a feedback feedback loop of increasing influence. As more money flows into index funds and ETFs, more voting power concentrates in BlackRock's hands. Individual investors get diversified exposure to the stock market, but they give up their voice in corporate governance. BlackRock becomes the intermediary, wielding collective voting power on behalf of millions of investors. The growth trajectory has been staggering. From $53 billion in assets in 1994 to over $10 trillion today, BlackRock has achieved a 20% annual growth rate for 3 decades. This isn't just organic growth from investment returns. It's systematic expansion through acquisitions, technological innovation, and strategic positioning during market upheavals. BlackRock's secret weapon in this expansion has been their proprietary risk management system called Aladdin. This platform analyzes investment risks across portfolios and has become so sophisticated that other financial institutions pay BlackRock to use it. Aladdin manages over $21 trillion in assets, including money that BlackRock doesn't directly control. This gives them unprecedented visibility into global financial flows and market conditions. Think about the implications. BlackRock not only manages $10 trillion directly, but their technology platform monitors and analyzes another $11 trillion for other institutions. They have real-time insights into market movements, risk exposures, and investment flows that no government agency or regulatory body possesses. They see the global financial system from a perspective that no one else has. This technological advantage, combined with their massive scale, has made BlackRock indispensable to governments and central banks. During the 2020 pandemic, when credit markets seized up and the Federal Reserve needed to implement emergency bond buying programs, they turned to BlackRock to manage parts of the operation. A private company was enlisted to help execute government monetary policy. The relationship between BlackRock and government agencies reveals a revolving door that blurs the lines between private finance and public policy. Former BlackRock executives regularly move into high-level government positions, while former government officials join BlackRock's leadership team. This creates a network of influence that extends far beyond traditional corporate lobbying. Brian Dees, BlackRock's former global head of sustainable investing, became President Biden's National Economic Council Director. Adewale Adeyemo moved from BlackRock to become Deputy Treasury Secretary. The pattern repeats across administrations and regulatory agencies. When the people making financial policy have deep ties to the world's largest asset manager, the boundaries between private profit and public interest become increasingly difficult to distinguish. This revolving door isn't accidental. It's strategic positioning that ensures BlackRock maintains influence, regardless of which political party controls government. They're not picking sides in political battles. They're embedding themselves so deeply in the system that they become essential to its operation. The real genius of BlackRock's strategy becomes clear when you examine their role during financial emergencies. Every crisis creates opportunities for consolidation, and BlackRock positions itself as the solution to problems they are equipped to navigate. When markets panic, regulators need sophisticated risk management systems. BlackRock provides them. When governments need to implement complex financial programs, BlackRock has the infrastructure. When pension funds need stability during volatility, BlackRock offers index funds that promise diversification. But this creates a dangerous dependency. The same institution that profits from managing crisis response also benefits from the conditions that create crises. BlackRock's business model thrives during volatility, where investor uncertainty drives trillions into passive funds. The more complex and interconnected the financial system becomes, the more indispensable their services appear. Consider what happened during the 2020 market collapse. As panic selling drove stock prices down 40% in 5 weeks, trillions of dollars flowed into BlackRock's funds, as investors sought safety in diversified index products. While individual investors lost fortunes, BlackRock's assets under management actually increased. They collected management fees on funds that were supposedly protecting investor wealth while markets were destroying it. This isn't conspiracy, it's a business model optimized for all conditions. BlackRock has engineered a system where they profit regardless of market direction. When markets rise, their assets grow and they earn higher fees. When markets fall, investors seek shelter in index funds, increasing BlackRock's share of ownership. They've created a heads-I-win, tails-you-lose structure that generates profits in all economic climates. The voting power that comes with this asset concentration extends far beyond financial decisions. BlackRock's annual letters to corporate CEOs have become a powerful tool for shaping business practices across entire industries. When CEO Larry Fink writes about climate change, sustainability, or corporate governance, he's not just sharing opinions, he's communicating voting intentions backed by trillions of dollars in shareholder influence. Companies that ignore these signals risk facing opposition during shareholder votes on key issues like board appointments, executive compensation, and long-term strategy. BlackRock's stewardship team doesn't need to threaten anyone. The implication is clear: align with BlackRock's principles or risk challenges from your largest institutional shareholder. This influence extends into areas traditionally considered outside the scope of financial firms. When BlackRock promotes environmental, social, and governance criteria, they're effectively shaping corporate policy for hundreds of major institutions. Their definition of sustainability becomes the standard companies adopt to remain favorable with their largest shareholder. The concentration of this power in the hands of 70 analysts working for a single private company raises fundamental questions about modern corporate democracy. These analysts vote shares owned by millions of individual investors, many of whom may hold entirely different opinions on governance, environment, and social priorities. Yet those individual voices are replaced by institutional voting, concentrated into a unified decision. Most investors in BlackRock funds have no idea how their shares are being exercised. They receive proxy statements that few read, fewer understand, and almost no one responds to. So by default, they delegate their shareholder rights to BlackRock's stewardship division, which votes in alignment with BlackRock's institutional philosophy, not the investor's personal view. This creates a system where corporate governance is increasingly determined by a small number of large asset managers rather than millions of shareholders. In theory, stock ownership is democratic. In practice, voting power has consolidated into the hands of 3 firms, with BlackRock at the top. The technological infrastructure behind this influence operates quietly, almost invisibly. BlackRock's Aladdin platform processes colossal amounts of financial data in real time, identifying risk exposure, asset flows, and market trends faster than nearly any institution on Earth. This information advantage compounds over time, strengthening their dominance. Other banks and asset managers license Aladdin, gaining partial access, while BlackRock retains the deepest insights for themselves. They're selling risk tools to competitors while simultaneously using superior analytics to outperform them. It's a strategy that monetizes both sides of the financial ecosystem. The global reach of BlackRock's operations means their influence extends far beyond American markets. They manage sovereign wealth funds for foreign governments, pension systems for public employees across multiple continents, and investment vehicles for institutional clients worldwide. Their decisions about asset allocation, risk management, and corporate governance affect economic conditions in virtually every developed nation. This international scope creates complex global conflicts of interest that existing regulatory frameworks struggle to address. When BlackRock votes shares in American companies on behalf of foreign government clients, whose interests are they representing? When they influence corporate decisions that affect global supply chains, trade relationships, and economic development, are they advancing American interests or maximizing returns for their diverse client base? The answers to these questions remain deliberately difficult to trace. BlackRock operates through a sophisticated web of subsidiaries, joint ventures, and client relationships that make it challenging to determine who ultimately benefits from their decisions. This structural complexity isn't accidental. It's designed to maximize operational flexibility while minimizing direct accountability. So here we are. BlackRock manages $12.5 trillion, votes shares in 84% of America's largest companies, and operates the technological infrastructure that monitors more than 20 trillion in global assets combined. They've positioned themselves at the center of every major financial crisis, government emergency response, and market transformation over the past 3 decades, often quietly, without public awareness. And they've done it while operating largely outside mainstream discussion, public scrutiny, or meaningful regulatory limitation. This isn't a story about conspiracy or hidden control. This is the documented reality of how modern financial power actually operates in the real world. When you invest in index funds, when your pension is managed, when governments need expertise, when markets need stabilization, the same institution is involved almost every time. BlackRock has built a system where they profit from managing the very same risks and crises that increase reliance on their services, where millions of investor voices consolidate into institutional voting power, where private decision-making increasingly shapes public economic outcomes. The next time you check your retirement balance, buy shares in a mutual fund, or wonder why corporate America seems to move with such coordinated alignment, remember this. You're not just participating in markets, you're contributing to a structure that centralizes influence, decision-making, and financial direction more than any individual investor ever could alone. BlackRock isn't just managing money, they're managing the ecosystem that manages money. And now, you know how they built it.